And our next guest does not see any signs of a small cap slowdown. Francis Gannon is co-chief investment officer at Royce Investments. I'm inclined to want to make the joke that if the earnings are going 70%, it's because they're going from like $1 to $2, just meaning the rub against small caps for a long time has been, look, for 3 years, I think it was, they made no money. Correct. They had no profit growth post-pandemic. So again, we're coming from a small base, I think. What would you say the real story is? Is it getting impactful now? This is not just another head fake?
I don't think this is a head fake. And in fact, if you look at the outperformance of small cap, it's actually in its 16th month. It goes all the way back to the tariff tantrum in April of last year. So it's been going on for a while, not just the year-to-date period that everybody's focusing on. But the earnings story is a powerful one. And you're correct, Kelly, in the idea that we had negative earnings in small caps for 23 and 24. And to be quite honest with you, probably 6 months through 2025.
Wow.
And so they just turned positive at the end of last year. And the outlook is pretty positive. And we think it's going to continue to actually be in line, perhaps even potentially better than large cap earnings by the end of this year into 2027. So if earnings lead the market, which I believe they do, I think you're going to be in a sweet spot here with small caps for a period of time.
How and why did they turn around? What happened?
Well, I think a couple of things have happened. One is, the Federal Reserve started easing, right? The last easing by the Federal Reserve, Steve, as you know, was December of last year. That helps small cap earnings that might be a little more debt.
Total of 75 basis points came off the top, yeah.
Correct. Two is you've had the AI story, which is benefiting small cap companies, not just from a productivity standpoint, but from actually hard assets, right? Companies are buying all sorts of different products that they need for data centers, air conditioning, et cetera, all helping small cap earnings. The third aspect of it would be, I think, the reshoring story, which has been a big story from an earnings perspective, and we think that's going to continue. And then you have deregulation, which has obviously been a big part of this administration, but that's really powerful for small cap companies. And then last but not least, you had the tax bill last year, or now I should say the Tax Act, right, where you had 100% depreciation on from a CapEx perspective on CapEx and research, and I think that's been very powerful. So I think it's driving small cap earnings, and we think that will continue.
So somebody told me once, not to make light of your 5 excellent reasons there, that there's only 2 reasons why small caps do well. Because there's a lousy story about big caps and there's a good story about small caps. Is that where we are right now?
If you go back...
Is that right, by the way? That's the old adage in the business, right?
I mean, I think it's more simplistic than that. To me,
even more simplistic?
I think it's earnings stories, right?
Boom.
If psychology runs the market in the short term, earnings runs it in the long term. And if you go back in history and you're looking at the Russell 2000 or even using the CRISP data that we tend to spend a lot of time with, what you find is everything happens in 10-year segments, if you will. We're coming to the end of a 10-year period of outperformance of large cap, and the small caps tend to outperform. When they start to outperform, will outperform for a decade. And I think that's where we are.
So that's a big deal because I think people need to understand you can get these better returns in the Russell and with the small caps, but there's more there's more volatility in them, right?
Without question. If you go back to the beginning of 2000 and you look at how volatility plays out within small caps, it's not uncommon to have a double-digit correction in small caps on any given year. So, in fact, that number would be about 19% is the typical decline. We've already had an 11% decline earlier this year, but the average return over the same time on an annual basis is closer to 11%. So you have to use that volatility and take advantage of that and build your position in small cap for the long term.
Some would say you get the reward because of the risk. I mean, the fact that it's
if
that
you
volatile.
Get the reward because of the risk,
well,
right? That's really the question.
Stocks often return 7% per annum because they're volatile. They might have big drawbacks in any given year. And so if the small caps are more volatile than the S&P 500, that should be because and connected to the higher return.
Without question. I want to be paid for the risk I'm taking in investing in small cap companies.
But I just also don't want Uncle Al selling his whole retirement portfolio and going into small caps, right?
I think there's a place for small caps within a diversified portfolio. I really
always
do.
Think about them,
and I think they're underowned, by the way. I think they're very underowned.
That's important.
They'll often put younger investors in small caps. This is what I've struggled with. Having gotten out, 401k things. Gotten out of the small caps because I was so mad at them, a couple of years ago. Because, again, it had been 10 years, basically, of this underperformance. But they're often pushed on younger investors, people with a longer time horizon. Am I kicking myself a little bit now? Yeah. Do I go back and add them back? Maybe. But I'm worried they're going to chronically underperform because that was the period of time I was most exposed to was the most recent decade.
Well, I think that's why we have to kind of look differently here, right, at this particular moment in time. Flows into the ETF, the small cap ETF, continue to be negative, right? Even after the move we've seen so far this year. So people, it's almost a show me stock, if you will.
Yeah.
So you need the earnings story, you need small caps to continue, and people are waiting for the next head fake, which from my perspective means there's more upside here with this.
I have had small caps in my portfolio for decades. I've been kicking myself for decades, except for the last couple years.
Really?
I have had them in the 401k, as you can imagine, and significantly exposed, and I love it.
But you're an active stock picker, right?
We are active stock pickers.
I'm a diversity devotee, so I just kept it because of diversity.
A little bit of everything.
A little bit of everything.
There's so many myths about small caps, and I think one of the big myths is you can buy great businesses, you can sleep at night not having to worry about some of the volatility and own them for long periods of time. And I think people have to get comfortable in that thought process around the small cap asset class.
I'm going to go home. I'm telling you this right now. I'm going to put some of my 401k back into small caps.
Please.
And in 10 years, if they have not done okay, Francis, I'm calling you. And I'm going to be like, what is going on? But you're making me think maybe I should, and maybe it's not too late.
I think it's, I call them the forgotten asset class in many respects. You're at the beginning of what could be a prolonged small cap cycle, and investors just haven't picked up on it yet.